Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Dilip Buildcon, which has stabilized around the 400-420 levels. And does it look like that it will have a big up move? Let's understand and let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Dilip Buildcon. The company was established in 1987 and they provide infrastructure solutions. It claims to be the largest and fastest growing road company. So they are very big on road infrastructure and perhaps market leaders. And they deal in roads, highways, metro projects, mining, urban development. So probably they are into different facets of infrastructure, and roads are their biggest asset at the moment, or their biggest business comes from roads infrastructure. Gets major government projects. So if you look at the government push on building more roads, or every day building a certain amount of kilometers of roads, then Dilip Buildcon comes up to be the biggest beneficiary of it. For the moment, the economy is not doing that well, and probably road infrastructure itself is not has not done well over the last couple of years, and that's why subdued numbers and pressure on the stock has maintained over the last couple of years. If you look at the financials of the company, then the sales have increased by around 15%, but there have been a massive PAT decline. So the profit has declined. This is because of the higher raw material cost, higher employee cost, other expenses that have gone sharply up. And apart from that, there has been higher interest costs. So with companies not able to procure so much of profits over the last 3 4 6 quarters, and they would have to pay back debt, and eventually when you don't pay back in time, then the interest cost goes up over time, and the higher interest cost is also eating into the profitability of the company. And it also gave a higher percentage of tax this time around. I don't know the reason basically as to why they did it, but they did give a higher percentage of tax compared to last year, although the return ratios are pretty outstanding, to say the least. The return on equity is at 27% and north of 27%, and the operating profit margin is above 17%, which is quite good considering it is into infrastructure and construction, and it has debt on its books. Yes, yet it is performing well on the return on equity facet. So that is why it is regarded as one of the better infrastructure companies at the moment, although the stock has not performed that well. So if you look at the performance of the stock so far, the stock gave a 16% return in the last 1 year. So it was trading at around 370 rupees. Now it is trading at around 420 rupees or so. So around about 16-17% return. But the problem has been that since January 2018, that is in the last 2 years, the stock has fallen 60%. And even with this up move from a low of 320, 330 to 420 levels, the stock is down over 60% from the peak, and the peak of the company was around 900 rupees or so. So you can understand as to how the stock has absolutely capitulated. I think it was around 1020 rupees as the peak, and now it is at 420. So you can understand that a massive fall has taken place, and massive market cap destruction has taken place in the Buildcon. Although the company as a business has not done that badly. Yes, the business has stalled a bit and the profitability has not increased, but has not stalled that greatly for the stock to fall 60-70%. But there are corporate issues. So there's nothing, I mean, with respect to numbers, but there are issues with corporate governance, with the way the management has taken decisions, that has also taken a toll on the stock price. And then heavy selling has taken place from the top investors during that last 2 year period when the corporate governance issue came to light, and that has also meant that there is no support from HNIs or large investors into the stock, and that's why the stock has not recovered as much as it should have. So, what are the reasons for decline? Well, there have been rumors of auditors resigning from the company, and we've seen one of the auditors resign from the company, and that has led to massive selling at that point of time, about a year and a half back. And it was added to the ASM list, so it was also being monitored by the SEBI, and along with around 40-50 other companies. This was also one of them which was being monitored, and that's why people wanted to stay away from the stock. There is a promoter pledging into the stock, so there are around 27.5% of the shares that are pledged at the moment. Nearly 28% shares of Dilip Buildcon which are pledged, and people do not like this, and people stay away from companies which have high pledged amount greater than 5-6%. And here we have a nearly 28% of the shares pledged, and that could trigger selling at any point of time, and that's why people want to stay away from it. The CFO resigned after the auditor resignation news came out, or the rumors came out. Eventually the CFO resigned because of personal issues, etc., and that also led to total confusion and chaos for the company and the stock price. And there has been concerns on executions and margins for the company, because over time, over the last 18 months or so, the economy has totally stalled in India. And although government is trying its best to get the economy going, the road infrastructure has not been the same as it was, say, 3-4 years back, and that's why the profitability, it doesn't seem to be coming. And many stalwart investors would have known that, and the stock started falling about a couple of years back, well before the downturn began in the sector. If you look at the technicals of the stock, it is also not showing a very rosy picture. The stock is trading below 200 DMA. That is the first sign that the stock is extremely weak. The supports lie around 410 to 418 levels. It is trading around 417, 418 at the moment. But if this support goes, then the next support lies around 375 levels. So we could see a good 20% decline if things doesn't pan out, or sorry, a 10% decline if the things doesn't pan out well on the technical front. The up move could be expected around a move or a closure above 450 levels. If the stock closes above 450 levels, we could see a decent 20% up move from that. Technically the stock looks extremely weak, and one needs to be very wary about buying such stocks, and have a very strict stop loss when you buy it, to the amount that you can take the losses to. Yes, if it goes beyond 475, the 200 DMA is around 450, 455. But if it goes beyond 475, which is a 6-month high, then we could see a massive move. And this will only happen when there's good news on the front of the stock. So that's why you need to wait for around a 10-12% move, and only then get into the stock, rather than buying now and regretting it. So what needs to be done? I believe you can avoid if you have not bought at the moment, and if you have bought it, say, at 600, 700 levels, you can average a little bit at these levels, but wait for good numbers. If the numbers doesn't come up, then you need to exit the stock. Have a 5 to 7 year view. Yes, the economy will turn back after 2-3 years. I'm very confident that in a couple of years, economic growth will again come back in India. So have a good 5-6 year view, and then see what happens. But remember that if there are corporate governance issues, then it doesn't go away so quickly. And always have a less than 5% exposure into the stock. So this was my video on the Dilip Buildcon. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.